Good evening and welcome to the regular meeting of the Board of Finance. We are here to hear the report of our auditors. Before that, please join me in the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. We are so bad at that, I'm just going to say.
At what?
We need to get our pledge in sync.
Oh, well, I think everybody knows it by heart, so they just do it.
Yes.
Does Lisa know it by heart?
I do, but I write it down just in case I freeze. Okay, so welcome. If you could just introduce your full names to the public. We're so glad to have you here. We all had a chance to read this, and I thought it was very, very well done, very readable, understandable to a lay person. I thought there's some good statistics in there, so members of the public, it's a long document, but it's a really interesting document. So with that, I'll let you introduce and begin.
Thank you. I'm Nicoleta McTighe, principal with CLA, and here with me today is Jessica Eniskov. She is a manager. Both of us have been involved with the audit and guide the team throughout the whole process. I printed the presentation because I wasn't sure if the electronics were going to work today, so I didn't leave it a chance. So if you could follow along, that would be great. I can answer questions at the end or any time if you'd like to get clarification on any of the slides. So the presentation today will be split between me and Jess. If you could please open it in the agenda page, I'll go over terms of engagement, an executive summary of the audit results, some financial highlights, and then Jessica will take it over to talk about federal and state single audit results and a summary of them, governance communication, management letter, and some upcoming GASB pronouncements for fiscal year 2023, which you guys are in right now. So we were engaged to perform an audit of the financial statements and to give an opinion on whether or not they were fairly presented in accordance to GAAP. In addition, we were engaged to express an in relation to opinion on the schedule of expenditures of federal awards and the schedule of expenditures of state financial assistance, as well as to express an opinion on compliance related to the major federal programs that we tested and major state programs that we tested. We are required to provide a report on internal controls over financial reporting and compliance with laws, regulations, contracts, and grants. And also another report required is report on internal controls over compliance related to the major federal and state programs.
The public can't see it.
We are not sharing the presentation,
yeah.
we just have hard copies of the presentation.
Okay.
Yeah.
So
Yeah, but
on the
still.
next slide, there is an executive summary of the audit results. As far as financial statements go, we issued an unmodified opinion on the basic financial statements, which is the best opinion available. Included in our auditor's opinion report, there is an emphasis of matter paragraph to alert the reader that the town implemented GASB 87 leases for the current year, and as a result of that GASB 87 implementation, a lease receivable and a deferred inflow is now recorded for lease arrangements where the term is greater than 12 months and the town is a lessor. So GASB 87 required that any leases that were material where the town was either lessee or lessor to now be implemented. Only the leases, the agreements where the town was a lessor were material to the financial statement, so that's why they were the only ones included in the implementation process.
I'm sorry, which ones did you say were included?
Lessor. So when a town leases property and receives revenue from others as a result of this.
The residential properties, Amy, would that be that?
No, because those are all one-year agreements. They're for the agricultural leases, the restaurant lease with the parks, the skating center lease. I don't remember the rest offhand, but those types of leases, anything that's more than a year.
Yeah, so any leases that are less than 12 months, they are not included in this because they are not part of the GASB 87 requirements to be included in the report. And the report on internal controls over financial reporting, which we refer to as Yellow Book report, it was clean, so it means that there were no findings identified as a result of us doing the audit of the financial statements for the town. On the next slide, slide 5, there is a summary of governmental activities comparative 22 with 2021. Do you want to take over? And Jess will take over and kind of go through the financial statements, which piece are
Or just then
for
anybody can see the chart that
for
you
the
have there.
public, so they can see the chart that I have included in the presentation. This chart here on page 5 includes governmental activities, which means that are all funds of the town, general fund, special revenue fund, capital project funds, internal service fund, all of them combined, with the exception of the pension and OPEB trust funds. So everything is included in here and is on accrual basis, meaning all your long-term assets, such as roads, buildings, vehicles, and stuff like that are included in there, and long-term liabilities such as bonds or OPEB and pension liabilities also are included, which is different from the fund financial statements, which are on modified accrual account, and the long-term assets and liabilities are not included. So that's why throughout the report, when you go, there is a difference between total net position and total fund balance, just because of the two methods of accounting that governments are required to present their financial statements. So on the governmental activities, the town ended with a net position of $126 million versus almost $123 million in prior year. And included in that net position, there is net investment capital assets of $111 million, restricted for grants and other purposes for $2.4 million, and unrestricted about $13 million. As far as the fund financial statements go, on page 6, there is a excerpt from the report, which is the statement of revenues, expenditures, and changes in fund balance, where all the major funds of the towns are reported in a separate column. So all the way to the right, we have total governmental funds that reported a fund balance at year-end at $37.6 million, and that represented a $7.4 million decrease from the prior year of $45 million fund balance. Included in this total is general fund, which ended the year with $20 million and an increase of $2 million. Sewer use fund stayed virtually the same. Board of Ed program funds had a slight decrease of $125,000 to end at $679,000 fund balance. Capital project funds ended the year with about $4 million. There was a decrease in the capital project funds, which usually is for the net fund balance, which usually is because of the timing. So if the funding for these capital projects were issued in the prior year and now you are spending them down, so fund balance will go down to show the expenditures that were done related to either a grant that was received or bonds that were issued to fund these certain projects. ARPA fund had very little activity for the year, about $21,000, and the rest of the funds for the ARPA funds are still sitting in the town in this separate fund, and they are shown as unearned revenue. So it's a cash and liability, if you will, in the balance sheet because the money is here, but it's not spent yet. So as that money will be spent in the in the next year or the next 2 or 3 years, you'll see that ARPA fund will have more activity than just at $21,000.
It
So that-
doesn't show a fund balance there?
It does not show fund balance because Jess is moving back to that slide. It shows assets and liabilities for the same amount because the reason it's presented this way is that if that money is not spent for what was for what you received it to spend, that goes back to the federal government. So it's not your fund balance to report. So it's a liability basically until it's spent. So once you spend it, the revenue and the expenditure are both recognized, but you are never going to have a fund balance in that fund. But you have a cash balance. So there's a difference between
Got it.
cash and the fund balance.
Okay,
Yeah.
perfect.
So the cash balance right there, if you look at the screen, is $3.8 million, which is offset by a liability or unearned revenue of $3.8 million. So there is a zero fund balance, but the cash balance is still there and available to be used.
So you're on a different page than here, right?
Yes, different page, just because you had questioned why there is no
Perfect.
fund balance. So we just wanted to show that the cash is there, just there's no fund balance. It's a liability is offsetting the cash. So as we saw from this page, the fund balance for general fund at year end was $20 million. And on the next slide, there is a breakdown of the general fund balance in 4 different categories. The first one is non-spendable, and that is $69,000 for prepaid expenses. There's a committed fund balance for education for a total of $651,000, and assigned fund balances for encumbrance. And as you can see there, I split what they are, what the dollar amount is for town encumbrances is $273,000, and for the Board of Ed is $7,000, with a difference now, so $20 million less all these categories, the difference is unassigned fund balance of $19 million.
Amy, what is the committed education? Was that their,
That's the non-lapsing fund.
oh, the non-lapsing, one. Okay.
On the next slide, there are some more highlights related to general fund activities for the year. So the first bullet there is related to the general fund budget. General fund revenues were $1.8 million above budget, and in the report that can be found under require supplementary information section of the report, and Jess is trying to just go to the page of that $1.8 million. And included in the general fund revenues were property tax collections, which were $965,000 above budget. General fund expenditures ended up being at $18,000 below budget for the year. Proprietary funds. So there is a section in the report where the health and dental insurance fund is reported, and the requirements for the internal service funds are that they are reported separately under proprietary funds section. And the health and dental insurance fund ended the year with a net position of $4.6 million, and that represented a decrease of $500,000 from the prior year.
What percent of fund balance was that? Do you know?
The
Yeah.
decrease, the 505, it's less than 10%.
I mean, are we good on reserves? How do we end on reserves, Amy, on that here? We were at like 33 that year or no?
At the end of '22, we used them in '23, so yeah, we were still probably about 33%.
So there is another section in the report under fund financial statements where the pension and OPEB funds are presented. So that Exhibit 8 that you see on the screen there, pension and other employee benefits funds is made up of 4 different funds. So you can see on Exhibit 9 or Slide 9 of your printout there, what makes up that trust funds total column. There are 2 pension plans, general government pension plan, police pension plan, and then 2 and Board of Education pension plan, and then another other post-employment benefit fund, or OPEB fund, as we usually refer to. As you can see from this slide, all the way on the right, there are totals for all these four funds. The total for trust funds at year end was, for net position, was $92 million, and that represents a decrease of $13.4 million for the year. And the main reason for that decrease was the decrease in the fair value of investments as of June 30th. As we all know, as of June 30th last year, 2022, all the investments across the board, they all went down. So pretty much every town in the region and everywhere reported pretty much a huge net change in fair value of investment and negative net fair value of investments. And that decrease in net position of $13.4 million affected negatively the net OPEB liability and net pension liability that the town reported on the government-wide financial statements, because that liability increased significantly from the prior year. Because net pension liability or net OPEB liability are calculated as total liability less the net position, and if net position goes down by $13 million, so the effect on the liability is to go up by that amount plus some other factors such as changes in assumption and discount rate and all that. So if you go to the next slide.
Just one quick question. So that decline would then hit which fiscal budget?
Doesn't hit your fiscal budget at 1 year, at a given year.
Because of the smoothing period?
Yeah, so the actuary, and actuary, I won't pretend to be an actuary, but when they do the calculation for the actuarially determined contribution, a change in a given year is not going to go 100% in the next year. So if you notice in the report, there are some other lines that say deferred inflows and deferred outflows related to pension and OPEB. And those are amounts that are going to be amortized over so many years. Different deferrals have different amortization periods. And so that those changes in liability are not going to hit you or the town in 1 year. They are going to be spread over a few years.
Yeah, we do 5 years, Amy, or 3?
So 5 years is for any changes on the investment earnings, and any other changes such as changes in assumption, demographic, and all that is based on the average life of the active participants. So that's why I say they have different.
Perfect.
But for the investments, it's 5 years.
Okay.
It's required to be amortized over 5 years. So on the next slide, there is a summary of the net pension liability and OPEB liability, or I should say a little bit more detail on that. So total pension liability for the town reported for the year was $33.6 million. And that information can be found on the long-term debt liability note. Of that $33.6 million, and that represented an increase of about $15.6 million from prior year. And we know about $14 million is from decrease on the net position, and the rest is, some of it is for change on the discount rate, and the other ones are for other changes for other assumptions. General
I'm sorry,
government
what was the first reason you said?
discount rate change.
Oh, I thought you mentioned the discount rate. I thought you mentioned something earlier than the discount rate.
Just
So
overall interest.
the net position changed, so the value of investments
Okay.
caused the net position to change. And in addition to that, there are some other changes that, some other assumptions that affect the
Okay.
changes in those numbers. General government plan reported a $14.4 million liability, and that plan for as of June 30th, 22 was 64.66% funded. And just keep in mind, that's just a static date, a given date, June 30th. That's what the numbers came out. 3 months later, if you run the numbers, the number will be different, but that's the number at the given date at year end, at the measurement date. Police plan reported a $6.3 million liability, and that was about 76% funded. And Board of Ed plan reported $12.9 million net pension liability, and it was about 67% funded at year end. OPEB liability had a liability of $3.9 million at year end, and it was about 84% funded.
Nicole, when you do other municipalities, I assume?
Yes.
How does our funding levels, 64 and 67, those feel like they're lower than they've been in the past? Are other towns seeing similar? Because of the.
If you look at for fiscal year 22 was a tough year for all these plans, and all the numbers did not come out as good. Like if you remember prior year, you were in the high 70s and 80s and the 90s. So I don't have the statistics in front of me, but you are on kind of like on the upper end of the curve when it comes to the funding. There are some municipalities, bigger municipalities, that are at close to 100%, but it's not that many of them. Majority are in the 80, 90%, the ones that are well-funded range. But then there are some other municipalities that are even worse than you. So
would you say we're within the norm?
I would say so, yes.
Okay.
Yeah,
I mean,
but
it
actually
all
it'll be-
it depends greatly on the discount rate as well, because someone could have a much higher funded, balance, or, percentage balance, or, percentage funded, and have an 8 discount rate. But if they were, we actually decreased our discount rate, which has a huge impact. Plus, the losses on investments last year was huge. So we kind of double walloped ourselves. I wouldn't expect that we'd see those decreases like this going forward. I don't know.
Yeah, I mean, your town has been slowly, or I should say consistently, lowering the discount rate, and went from like 6.5 to from 6.6 to 5 to 6.5 in the last evaluation. So obviously, if you
Right.
you decrease your discount rate, your liability goes up. So
Right.
Most municipalities are moving away from having the 8% and the 7%, but depends on how fast they're going towards going closer to reality, really. But yeah, to answer your question in short, you are within ranges, good range. I should
Okay.
say.
Thank you.
Actually, your actuary probably has better statistics than I do, but. So this is what I had prepared for the financial statement side of the audit, and I will have, if there are no questions regarding the financial statement audit, Jess will take it over and go over the federal and state single audits and some other communications.
Folks, do you want to ask questions first, or just go through why don't we power through and then we'll circle back with questions?
Okay.
Thank you.
All right, so I'm going to start on the slide that says federal single audit. So the total federal awards expended this year were $5.9 million. And the major programs that we tested this year was the COVID-19 ESSER funds, the elementary and secondary school emergency relief funds, the child nutrition cluster, and the Highlands Conservation grant this year, which was actually in conjunction with 2 of the state grants, which I'll go over in a minute, all for the purchase of 1 piece of property. I believe it was Meadowwood. Okay. So as far as the testing on those programs, we had an unmodified opinion on compliance. So we're required to test certain compliance requirements for each program, and so there were no findings on those programs. We also had no findings on internal control over the major federal programs, so it was a clean report for the federal single audit. On the state side, total awards expended were $12.9 million. The ones that we look at for testing were 4.1 million. What basically comes out of there are grants that we don't need to test, which is mainly excess cost and school construction. So those are exempt from testing, so our population of testing, it was the 4.1 million. So in that 4.1 million, we tested 3 programs: the open choice program, the open space land acquisition, and the farmland preservation, which those 2 combined with the federal all were for that purchase of the one piece of property.
What page are you on? I'm sorry.
12.
On the slides, yeah, sorry, page 12 on the slide. So on those 3 programs, we had an unmodified opinion on compliance, we had no compliance findings, and we had no findings on internal controls over those programs.
What was the total amount in the project choice that year? You know?
The open choice?
Yeah.
I don't know off the top of my head.
That's
Do you
okay.
have have Amy bring that up while we continue. Right, so just
What
to
was
go.
the question? I'm sorry.
How much was open choice?
How much did we receive in open
State
choice
on here,
grants?
too.
Because that does not come through this board. It goes, we don't often see that, except in reports. So that's reported in a special revenue fund? Is that how that's recorded when you do
It's
that?
in the education
Yes,
grants fund.
under Education Grants
Yeah.
Fund, which is not a major fund, so you don't see it in the
Right.
the front in the
So-
basic financial statements, but it's in the back of the report under combining.
And the B1 and
Schedules.
B2 schedules. So the total open choice this year was about 1.5 million. So that would be the piece that we tested for the state single audit. Right, to our auditor's communication, as Nicoletta had said previously, we implemented GASB 87 or adopted GASB 87 this year. Inherent in any financial statements are estimates, so we look at those estimates for reasonableness or management bias, because that could be something that you use to kind of change the results of the audit, if you will, or the numbers. So some of those things, we kind of talked about the net pension liability, which is based on actuarial assumptions, the net OPEB liability, which again has a third-party actuary who with you guys calculates their assumptions, which we look for reasonableness. We talked about the discount rate. If we saw something like 9%, we might say, wait a minute, maybe this isn't reasonable. So all those were within what we would say are reasonable ranges. The depreciation expense, which is based on the useful lives, that calculation. The allowance for uncollectible receivables, again, that's something that Amy and her group looks at. Any receivables, is there anything that may not be collectible? And so that's what goes into that allowance. And then the IBNR healthcare costs, which is the incurred but not reported, which again has a third party involved to look at those claims at the end of the year. We had no disagreements with management. They didn't consult any other accountants if they didn't like our advice on a transaction or how we interpreted something. They didn't go basically opinion shopping to look for somebody who necessarily went with their opinion. We didn't have any difficulties encountered in performing the audit. We did have an uncorrected misstatement, or what we call a past adjustment. So like Nicoletta said earlier, you implemented 87 on the lessor side. So those leases that the town as the lessor go into those governmental funds, your general fund, and I think there was a couple smaller ones in some of the other funds. The lessee side are items that the town is leasing, for instance, copiers or postage machines or some smaller things. So those actually only go on the full accrual statements, so that first type of statements that Nicoletta talked about, and it was not material to those statements. So rather than spend the time to do the calculation and everything involved in that standard, it was a past adjustment. It is something that's going to have to get looked at every year. If you enter into a lease, maybe it will be material and will have to come onto the books, but at 6/30/22, they were not material, so it was a past adjustment. We also had no independence issues.
Did I hear you say that as a lessor, the revenue is always booked to the general fund? Is that always, or
It
just
depends
when it
where
is?
the property is.
Okay.
Yeah, so it goes to the governmental fund. So there's some in the general fund, and I think there's a couple other funds that had a piece of it.
Okay, that's
Yeah.
why I was like, all right, yeah, that's not what we do, so. Wanted to make sure.
No problem. We did issue a management advisory letter, so these are recommendations for improvement. They're not significant deficiencies, they're not material weaknesses, it's just things that we've noted during the audit that we think the town can improve on. And we actually didn't have any new ones this year. These have all been outstanding for a couple of years now. The capital asset reporting, that is, right now the town has their capital assets in Excel documents, and with the transition to Munis, it will be switching over into Munis to kind of take away some of that manual calculation that's being done on those Excel spreadsheets. The system will do it. So that's expected to be implemented in fiscal '23. I think it got delayed maybe because the system implementation got delayed,
Yeah,
COVID,
23,
like
24,
everything.
yeah.
Okay, maybe 24. But it's on management's radar, and they're going to work to get it into the system. The second one is a fraud risk assessment, and again, this has been on the management letter for a few years. It's a best practice to just have somebody look at the areas of the town where there's fraud risks, what controls are in place, and that is planned
This year.
Yeah.
fiscal
in our budget for
24.
Amy, is that for the town and the Board of Ed?
And then the last one is just an accounting procedures manual. The town and the Board of Ed have several files on the processes, but it was just kind of bringing it all together in one place in one document. And again, that's expected to be completed for '23.
Yeah, probably by the draft.
Okay. So upcoming GASB standards, so you're currently in fiscal '23, so the ones that are going to be applicable this year, Statement 91 is conduit debt, which the town doesn't have, and Statement 94 is public-private and public-public partnerships. Again, the town doesn't have that. The big one for this year is going to be Statement 96, which is very similar to the lease standard 87 that was just implemented this year, except it has to do with subscription services. So if there is some type of computer software that is leased, I'm going to use that term loosely, for more than 12 months, it may apply the same way the GASB 87 standard, where you may have, either a liability, or you don't really lease software to anybody, but if you're leasing software, you might have a liability on your books at year end. But we will obviously look at that with Amy, since she just had the joys of all the 87 leases. Now we're going to turn around and do software subscriptions. The last slide is just our contact information, which, you can use if you need us, but I think there's some questions we can probably go through now.
Open it up to questions from members of the board.
I'm just saying thanks to Amy for having another clean audit. I think those are tough to come by. Just given the outcome, I don't have any questions.
Yeah, and I will say, Amy was short-staffed this year when we came in, and we got it done, but she definitely has had to work extra hard herself this year to get the audit done.
And she came to our meeting on her birthday.
Her birthday's tomorrow.
Birthday Eve.
Wait, we don't have a meeting tomorrow?
We'll schedule one. And bring a cake. I had just a few questions. And first of all, thank you and congratulations to Amy, and to you as well. We know how much work this is, and very grateful to everyone who worked on this. One of the things you had mentioned, that there's no indications of assets purchased with grant funding, and I just wasn't sure what you meant by that.
Right, so that's in the management letter under capital assets. So if the town receives if the town receives grant funding and they purchase an asset with it, it should be marked as purchased with grant funds. So if you ever dispose of that asset, there's certain requirements that need to happen. So when all the assets go into the system, anything that may have been purchased with grant funds needs to be indicated in the system, just for tracking purposes if you choose to sell it. And
So Amy, what happens if we choose to asset? Does that mean you have to research everything before we sell it?
So for their older ones, I'm honestly not sure what happens, because like she said, there has been no grant indication,
Right.
but the ones that we're buying with town aid road and stuff like that, we have started tracking them. So since my tenure year, yes, but prior ones, we have no idea what the funding source is.
Okay, we'll just keep those assets forever then.
I guess so.
We scrap them.
Yeah.
Make the money.
And then you also had mentioned that construction progress should be maintained and updated annually, and what did you
Yeah,
mean?
again, that's kind of in the system. So any projects that you're starting that are not being depreciated yet, so I'm just gonna use a school, but if you were working on a school as it's not a one-year project, so it may go over 5 years, so it's just a matter of accumulating all those costs so that when the school does open and become in service, that it gets moved. And again, that tracking can be done in Munis, it's done on spreadsheets right now, it's just, I think maybe that is actually from a few years when Amy wasn't
Yeah, so
here,
we have,
then it
like,
was.
the Henry James project and stuff has all been tracked and moved. This is from old comments, but.
Yeah, but
It
it
will
needs to all
transition
get in the
over.
system and
Yeah.
just track it.
And that will happen. We have, Munis has that capability to do that, so it's just, really, it's just a matter of a year or so to get it all in.
Right, so our previous accountant before Constance had started working on it, and then with the transition, Constance will probably pick it up this summer if I were to guess.
Those were my main questions. I thought it was very easy to understand. It was very well presented. A lay person could read it and sort of get a sense of where the town was. Is there anything that struck you as unusual in our financing or the way we do stuff, or you that surprised you?
No surprises in this year's audit or reported, and the town applies for the certificate every year, so we are confident that the town will receive the certificate again for 2022.
All right.
I'm just interested in the why, that it's very rare you get an audit that doesn't find something wrong. Just the nature of the beast. So this is good. And usually when things go this well, it's a combination of professional skill and culture. But I'm wondering, what are your observations? What the public out there should have some confidence in our town government that they got this good grade. But what is it that needs to be sustained? What is it you found that produced these results? I realize that's a subjective call that goes beyond numbers, but I've usually found that it's both professional skill and culture. But what should the town continue to do to get this kind of grade going forward?
To support the good management you have in place. Finance director works really hard to get it done. And your leadership is very vital and important to the town. So I would say continue doing what you're doing and supporting your finance director in the endeavors of doing the financial statements and performing the audit.
Good.
Any other questions for members of the board at this time? And it's nice to see you in person.
Yeah.
So thank you for being here. I'm sorry it didn't work out last time. It was a crazy snow day.
Yeah, it's good to see everybody.
All right, well, thank you very much.
Thank you.
Thank you.
Amy, did you want to add anything before they leave? Were you happy with how the audit went?
Of course.
Except for the implementation of the leases, I mean, yeah.
Right, that was a big lift for a lot of people. And then you get to do it again.
I know, we're done with the implementation, but now we're just maintaining.
Well, but you
Well,
get 96.
96, yeah.
Yes.
But we have less of those. You have those on the Board of Ed side, though, probably.
Yeah, we
Most
do think
likely.
we do think it's gonna affect Board of Ed side more so than towns, because there's.
Sorry, what did you just say?
We do think 96, just in talking to various towns and Board of Ed educations, that 96 with the subscription is gonna be more on the education side. The Board of Eds are gonna have a bigger impact, which,
Yeah, we've seen the Board of Educations have more of those type of arrangements than towns do, because they use more software. They have several locations and schools and programs that they are necessary to be used to run their operations. So, so far we've been seeing more geared towards the Board of Ed, that the 96 will apply than the town, but that will still be Emmy.
So I'll just ask one quick question. I know you do audits in lots of other towns. How often do you find in other towns that there are, major problems,
So, I
findings,
mean, we have the
whole
the
gamut?
whole gamut, the whole range of clean towns. Some they have some advisory comments, the others we have material weaknesses, significant deficiencies. Sometimes financial statement audit is clean, but there are issues with the state and federal single audits, different type of findings. So we see it all.
Yeah, okay, good. Well, I'm glad you're not seeing it here. Go see it elsewhere.
And happy birthday.
Happy birthday. Happy birthday.
Thank you very much.
Thank you.
Do you just-
Yeah, you can keep it there.
Okay.
Don't keep Amy too long.
We'll see you soon at the Friday.
Yes. Have a good birthday.
You know,
Careful drive
you know
home
what
with that.
happened? I had looked at this today and it said 6, and so somehow in my mind, we were starting at 6. So
No worries.
my apologies for being late. I
Well-
was looking at the wrong notice.
We're on to budget discussion, but primarily our job tonight is just to forward the budgets to public hearing. The one thing, we did get a revised budget from the Board of Ed, so we could do that budget, or we could present it as is and do the revision on, April 4th. So I just wanted to get thoughts. I think the Board of Ed was expecting we would present their revised budget, but I'll get clarification from Amy on that.
Say that again. You're going to get clarification from you?
Yes, we have a budget in our sheet. We've got something from Katie in the interim. So why don't you just fill in the board and the public as sort of the difference between the two?
So the Board of Education cut about $200,000 from their budget, and the communication was sent out letting you know that they officially did that. It was a formal vote of the board. So, I mean, right now that is officially their budget if you want to update it for the public hearing.
Why don't we do that and just get the actual budgets? We'll still be making changes after the hearing. So, are people comfortable with that? Okay. Thank you to the Board of Ed for taking another look, and thank you, Wendy. I know your board will have discussions on Monday. I wanted to publicly thank Amy. You turned around a lot of information for us in the last 2 days and got us a lot of information from staff. Much, much appreciated. Did everyone feel like they got their questions answered or need more information?
I guess I would just ask for a little bit more information on the loan to SBAA. 'Cause I just,
sure.
just want to know where that money, it came from somewhere to give to them, and I was just wanted to understand that a little bit more. And really the timing and what they've communicated to you in terms of what the payback timing is of that. Because the way that I look at that is a little bit as if it doesn't even exist in the budget. And so my comments yesterday from just any types of reductions, that would be stripped out of that. It wouldn't count towards the budget reductions, because it's a confusing one to me as to what bucket it came out of to pay, and where is that gap being filled in the budget otherwise, so.
Yeah, so I can touch base on that a little bit. So for the capital project fund, I think it was a $2 million project, and they owe us, say, $100,000. So we paid the full $2 million to the vendor, and then we have a receivable for that $100,000 for SVAA to pay us back. So we basically just fronted them the money. I don't know the terms of the payback, though. That I can get you.
Okay, so it didn't come from another line item in the budget?
No.
Gotcha, okay.
So it would be a revenue loss, a revenue offset.
Right.
Yeah.
Mhm.
And presumably, the whole amount wouldn't be booked to this year because it was supposed to be paid over several years.
Right.
So.
Well, if you were to forgive it, it would be booked in full. But if you're not going to forgive it, then, right, a portion would be booked each year.
We might want to just forgive this year's.
I mean, yeah.
Do it 1 year at a time.
I could get you the details, yeah.
Thank you.
I also had an SBA question following up on, she did give you the information on that 14% of their rides are Medicaid. She didn't go on to give us any information on, like, okay, so if the proposed legislation happens increasing Medicaid, what would that result in new revenue for them? And is that enough to close the forward-going gap that they have? I mean, again, to the point that Eric raised, is this a one-time, we're helping you with your operating costs this year, but you've got a plan to fix that? I don't have any sense of what that plan is, other than potentially Medicaid, but how much,
Okay, I'll follow up with Karen on
how
that.
much is that gonna result in?
Anyone else have questions? I have just a couple. So Amy is going to get us a monthly report in April, so thank you. So we can take a look at year-end projections and just sort of see what we're looking like there, particularly following what's happening with the Board of Ed. If we're going to need that for special education, less money will be available to do some of the offsets we want to do. Amy, one of the questions I forgot to ask when Matt presented is, how much are we booking in revenue for Project Choice next year? Is it the same reimbursement rate as this year, or are we at the higher level of reimbursement?
So there was a change in the legislation, and I think we're anticipated to get 300,000 more. However, there's also something that goes along with that, where we have to mandate, or we have to achieve like a 4%
Right.
population, and I think that's where our uncertainty is if we'll achieve that, because we've been right on the cusp for the last couple of years. But I can follow up on that.
And could you just get us what the difference in revenues would be? I think it's fairly significant. You go from 6,000 to 8,000 or something like that if you hit the
It's
4%.
8,000. Yep.
So that would be helpful to know, and then we can evaluate whether that's an appropriate thing to budget for or not. I think that goes into according to our auditors, that goes into education programming and not general revenues. Is that right, Amy?
So it goes into the grant fund, but we use operating as an offset. So, for example, say the director of equity is charged to that grant. So otherwise, we'd be paying for her salary via the operating. So we're already utilizing that grant as an offset to our operating.
Yeah.
Mhm.
I just wanted to see how that was, I just wasn't clear on that. Then, looking at the budget, I know Wendy's going to get out a letter on the budget, but if you link to the budget section, is there a way to add a link so people can email the Board of Finance directly? I know it's on our page, but it isn't in the budget section, so people might want that.
Sure.
Then follow up on the attorney letter regarding municipal cap. Amy is, to get everyone on the same page, reaching out to Bob DiCrescenzo based on our last conversation. When you look at the motor vehicle reimbursement under the OPM summary, they list it as a subset of municipal revenue sharing. And municipal revenue sharing is subject to the municipal caps, and that's about 1.5 million, so we just want to make sure we're in compliance. One of the pieces of information we don't know at this point is what inflation rate they're going to apply. If they do the 6, we're at 6.04 about, Amy, so
Yeah, I don't remember. I think last year they used like 6.8 or something.
it'll be much lower this year, I think. Not below 6, though.
No.
What's the 6
I can reach out to Martin at the state and see if he
Yeah.
can tell me.
What is that?
So the municipal cap is you can't exceed 2.5% or the rate of inflation.
Oh, okay.
But they don't tell you which rate of inflation they look at what point in time.
Right.
Right.
And we're very close to that number, depending on what they use, and we don't want to jeopardize $750,000 for
Right.
want of a $50,000 mistake. And there are lots of exemptions, so this is just one.
Mhm.
And also, I don't want Amy to be responsible for that, which is why I want Bob to look at it and review Amy's work so that it's on council and not on the director of finance.
Yeah, either way.
Either way, I mean, either way, we want to
Sure.
get it
We
right.
want to get it
but-
right and not cut it too close.
Yes, exactly. So we'll look for that. If he could, I know, I love Bob, but to the extent he can get it to us before April 4th, that would be great.
I will do my best.
Okay. And then one of the questions that Tom Roy answered about the lot zip bonding, He did indicate that the bonding would not be done until the project, they get the grant, the LOTSA grant. But the question is, why are we going to bond 2 years before we get the grant? Can we delay going to bond?
We wouldn't. So, I mean, it's in where we think it might be. So if they got the grant approval, then perhaps we could start the bonding early. As long as they have that letter from the granting agency confirming that we will receive the funds, we can go ahead and bond for our portion if they want to start the project.
Oh, so let's just start the project, in case we get the letter before 2026, we can start the bonding and, okay.
Exactly.
Okay, perfect. I wasn't making sense on that. And then, just Amy, on the monthly report, can you just give us a verbal update on where we're with the health fund, just make sure we're still on target?
Sure.
And one of the things, I know you mentioned that the Board of Selectmen did not choose to assign money for the health reserve.
Mhm.
Is that something we should be evaluating on April 4th, either using general fund?
I mean, that's so hard to say because the budget that we put together for fiscal year '24, it doesn't show that we would need it. But it really just depends on where our claims experience goes this year. So honestly, I don't think that we would know until the end of this year and the kind of claims experience, actually, we wouldn't know until well into '24 if we would need it at the end of '24 because we don't know what the claims experience is going to be. Right now, our claims experience is running in line with the prior year, but they've also seen an uptick compared to the prior year as well, so.
So maybe this year, we always do reserves at 15.5, maybe this year we do them at 16 at the year close. Would that be one way to accommodate that if you feel like things are going closer? Or do you prefer an assignment? Will you give some thought to
Yeah, we
that
can
and
talk
advise
about it.
us on the 4th on that? The other thing we've asked Amy to do for the 4th is to, how best to utilize, it's about 1.5 million that the Board of Selectmen identified from capital reserve?
For the ARPA and the 1.2.
1.2?
Mhm.
How best to use that as an offset on debt service over the 3-year spike? And if you could, you have the time to put that in writing, just so that we can have it in our packet, so that the public can see it as well. Is that something we need to check with Barry on? Would that impact our bonding to use that in that way?
No, as long as it's for one time and it's not for ongoing operating.
Right, are people comfortable with having Amy do that evaluation for us on that?
Yes.
Okay. Oh, and then the last question was, I went back and looked at our last quarterly. In our last quarterly, we were estimating about $1 million in excess revenues for year-end projections and about 600, almost 700 in savings from expenditures, so about 1.7. But I think last time you mentioned it was a net 1 million, so I was wondering what changed.
Yeah, so that was what I was talking about on the revenues, where when at the end of December, they were running in line with where they were in the prior year. And with a couple more months of activity that I was looking at when I came up with those estimates, it was starting to run behind. So, like I said, I want that extra month to see, are we truly going to be behind, or are we going to catch up and still be in line with last year? But it looks like we're going to be a little behind.
I've looked at a few other towns, and that seems not atypical this year. Some of the collections are coming in a little lower than they have in the past. Are we seeing that?
So our collection rate is still good. There's been a couple of taxpayers that are larger taxpayers that were later in paying. So we are seeing that trend. Our collection rate is still good, and they have been paid, but yeah, I mean, we're not completely out of the loop with the norm of what you're seeing.
Okay, so we'll have at least a better idea in April, take another closer look, and we'll just monitor that a little bit more closely than we do in the past. Let's see. All right, so are we ready to, the letter. So I passed out a letter. I wanted to see where people comfort level with that. My thinking is if people are comfortable with it and Amy cleans it up, we could just put it on the budget page. And as Wendy refers people to the budget page, it's there for people to read.
Can we actually distribute it, though, because not a lot of people, like, even think to go to our website budget page and
So I
look
think,
for
Wendy, are
information.
you planning on a
I asked,
communication?
I think I sent an email out to Maria and Tom to see if we could send out a communications. I don't know the answer to that, if we were planning to, about the budget and include links to our budget and I offered to include a blurb or something, so I don't know the status on that right now.
What would that be, Wendy? I mean, it's a, you're saying, not everybody goes to the website, but what sort of outreach?
The news, like the town listserv sending out a notice.
Town listserv, okay.
Because that's typical for the first selectman and town manager to send that, so I'd like to defer to them with the link to us, and we can certainly send it out
Yeah.
on our own, but,
And even that is not to every household in the town.
Right.
It's just whoever's happened to sign up for it, so it might be good to put it in the Valley Press or something like that.
We did get the budget is out on the finance page.
oh, excellent.
Yeah, I noticed that yesterday, yeah.
Oh, the other thing I did not see, though, did your PowerPoint make it on?
No, I wasn't sure it was on there last year until it was cleaned up for the town. So I still haven't made those couple corrections yet.
Okay.
But we can put it out there. Last year, I noticed that it was labeled the public hearing presentation. So I assume we'll get it out there by then, since I made my correction.
Okay. And the Board of Ed, I think I saw Amy, they put up their
Yeah.
documents, so they're good to go. Is there anything else in terms of cleanup we need?
Well, the board has their original budget, but not the amended budget up there. I'm on their site now, I was looking to,
Oh. I'm sure they'll post that. That just happened like
They
a day,
will.
yesterday.
Yeah.
yeah, I'm sure it's just a little bit behind, but.
Oh,
yeah.
okay.
Did they actually, and I apologize, I haven't had it, Amy finally got my original budget, which went to my neighbor's house.
Oh, you did get it? Good.
And they were like, wow, gee, we wondered why we had packages for Linda Schofield.
Oh, gee. Oh, dear.
But I will look, I just got them 10 minutes before I came. But does the new missive that we got include what they cut, or just a bottom line?
No, just bottom line.
Just bottom line.
Because they have
It'll
bottom
probably
line.
be in their presentation as to what they
Yeah,
cut.
it's their, yeah,
Yeah, I looked at it quickly and I was like, oh, did I miss something?
no, just for members of the public, process-wise, the Board of Finance does not have any say or input as to how they spend the money once we approve a number. We just set the bottom line, and full spending authority and decision-making rests with the Board of Selectmen, unlike with the Board of, Board of Education, unlike with the Board of Selectmen, where we do have some line item input. All right, so, and I've lost the motion you told me to do, Amy. So and the changes they made were not to the non-public schools, it was all to their operating, okay. So, I'll try it on the fly.
Go ahead. I think I have memorized. Go ahead.
I have a motion to approve the Board of Selectmen's budget as proposed. So remember, there will be some changes later that they made that we'll accept. And the Board of Education's budget as amended on
March 21st.
March 21st, as presented to our board. So there will be a slight change in the document summary that Amy gave us, which was so helpful. I can't even tell you how wonderful that was. Thank you for getting that to us early. It enables us to see everything. So that number will just come down 200 on the number you had before you. So that was kind of a wrangly motion.
So your motion
I'm
is to
asking-
forward those two budgets to the public hearing
In accordance with section 808 of the charter.
in accordance with section 808 of the charter. I move that.
Second.
We'll go with Art on the second. Any further discussion?
Yeah, just for the benefit of the public, this is not a vote on the budget. This is just simply to move it to a public hearing.
Yes, and we welcome and hope people will come and share their thoughts. So all in favor, please say aye.
Aye.
Okay. And if people are comfortable, we're good with the letter, so we'll just ask Amy to check it and see. Amy, who are our top 10 taxpayers these
I
days?
don't know offhand.
Oh, okay. It will be the big
Francine
reveal.
has sent it to me though.
Okay, the big reveal, and we'll just post it
Anybody
there.
on this board?
No, no one on this board,
No.
sadly.
Exactly.
All right, is there anything else for the good of, is there anything else we need to do, Amy, at this point?
I don't think so.
We can't leave, it's not even
Comes
7
on at
o'clock.
7:15.
Come on, now, I gotta
No, we've got the police academy.
eat. 1 hour. I mean, this will be your shortest meeting ever, Lisa. Go with it, go with it.
All right.
Yeah, we've had a shorter one.
All right, and lastly, Derek wanted to sing happy birthday
No, no,
No,
by
that's okay.
himself.
Feliz cumpleaños. I don't know.
Well, we won't sing, but we do wish you a happy birthday
Thank
and hope
you.
you enjoy your day, and hopefully you can even take it off.
Maybe.
All right.
Motion to adjourn?
Yes.
Second.
All in favor?
All right.
We are adjourned.